Welcome to Trading Lounge and the gold silver report for the 19th of February. And starting on the weekly chart here, the 38.2% retracement level is back lower here, as pointed out last time we spoke. So this is a medium level here, 1650. Obviously it's moving down. It's not moving down on higher volume, but it's not the end of this session. So we'll just keep an eye on that. Let's just cruise in and take a closer look. So on the daily chart, there's two ways that I'm sort of tracking this down here. One of them's in 3 waves and one of them's in 5 waves. So 3 waves could be the A wave to here, and then a smaller A, B and C wave to here, and then looking for 5 waves down here, finishing and then turning up from that point. We could also look at this as a larger structure to the downside as well, in terms of looking at this as wave 1 here and 2 here, and then 1 and 2 and 3. So it can take us down further. So we need to track 2 counts moving down. Where are we? Maybe here. Okay, so this was one of the counts here. I think we looked at this last week, didn't we? So just a WXY with an A wave here, an A and a B wave and a C wave here for the B wave, and then 5 waves down through here. I can see that this has got a bit further to go down now. This is, I need to adjust all of this, but yeah, that's sort of playing out quite nicely. We'll take a closer look at this on the tick chart and we'll break that right down so we got a better understanding of it. So I won't spend too much time here with this, but yeah, still further to come down, so to speak, like this. Just drill in to see what other counts. I can't remember what charts I've used here. Yeah, that's much the same, so it doesn't really matter. This is the other count where it comes basically an A, B, C down here for WXY, or we come down, we start counting this as 1 and 2 coming into play here, or 2 over to here, and then down for 1 and back for 2, and it brings us much deeper down, closer to the 1650 area. So I think both are valid, but because the market's been working in sets of 3 waves all the time, like ABC, ABC, and you could also look at this as an ABC as well in here. So it's probably likely that we've got this A, B and C wave here. There may be some correlation between equality between wave A and wave C here as well. Yeah. I mean, one of the other really important things here, I guess, for this is that we are seeing interest rates rise. So that's going to be a real sort of enemy for gold. But at the same time, from what I'm sort of reading online, is that there's not a lot of physical gold out there by the looks of it. And the premiums that are now on gold to buy physical gold are really through the roof. And there's the COMEX delivery, I think, in March, which they may be struggling to supply as well. So, you know, we do see the markets change on equinoxes. So the March equinox around the 21 to 24, depending on sort of where you are in the planet. But that could be a real sort of date, that March. Or is the COMEX delivery date, is that early? Is that on the, is that in the 20th or around that point? Probably. I mean, the futures contracts roll over at that point, don't they? I don't know if the swaps and all that are different. Yeah, so I'm not quite sure on that. But the March delivery could be a real eye-opener, so be all eyes on that. But anyway, we'll just continue to cruise in. I think I don't know if we were looking at the 2-hour chart here. No, we won't. So maybe the 1-hour chart. So yeah, last time we spoke about this breakdown through here, I had it labeled in green here. Okay, same labeling, just I've just changed the color. So from wave B here down to wave C here, we'd be looking at 5 waves of 1, 2, 3, 4, and 5 coming down here. So it's either going to be wave C or wave 3 here. So that's something that we need to figure out a little bit. But yeah, today is really kind of understanding this little trend in here. And to do that, it's just easier if I go to the tick chart and bring in some data here, maybe 20. Yeah, okay. So from the top of that B wave here, I mean, this is so you can kind of just really compare your own notes if you're counting, or if you can see that I've done something wrong, well then that would also be good to know, or you've got other ideas. I'm always open, and it's good if you share ideas, you know, and it doesn't matter if you're right or wrong, you know, the more ideas in a hat, the better. And sure, you're going to be wrong sometimes, and sure, you're going to be right. And, you know, so, and I'm in the same boat as well. So, you know, put yourself on stage and have a go. So counting this down here, I'm thinking of this as wave 1 and 2 here, and then all of this down for 1 here. It's probably typical to also look at this here as, you could look at it as 1 and 2 and 3 and cross for 4 and down for 5 here, and then a rally back. I'll need to mull that over a little bit more, but I did pull this apart here and counted all this down. It's okay as a, you know, as an impulse wave. When I say impulse wave, 5 waves. So down for 1 and back for 2, then down for 1 and back for 2. And then I was looking at this as 1 and 2 and 3 down to here, 4 and 5. A bit dodgy, so you could throw tomatoes at that, of course. And wave 2 here, and then 1 and 2 and 3. And yeah, the wave 4 is really high here, but it doesn't overlap wave 1. And then we come down to land into wave 3. So 1, 2, 3, and 4 at that point. And from 4 here we go 1, 2, 3, 4, 5 for the 3rd wave, and then all of this up here for the 4th wave. So at green 4th wave here, and then 5 waves down here for 1 and 2 here, and then we're coming down for the 3rd wave here. So that will be 1 and 2 and 3 and 4 and 5 coming down here. We want this one a bit longer than wave 1 here. And then there'll be wave 4. We don't want wave 4 overlapping wave 1 either. So we'll just see how that plays out. And then wave 5 of 5. And that will just give us wave 3 at that point. So we would still have wave 4. That can pull back to the wave 4 of 1 lesser degree. But what it normally does, it could be sideways and complicated and all those sort of, typically it would break the trend, the previous trend channel of the previous move here. So that, don't take that as a bullish sign. I mean, it could be, and I could have everything wrong, but this wave 4 normally breaks the previous trend channel, so keep that in mind. And then down for wave 5 here now, which is closer to the 17 sort of 100 area, and we're getting sort of close into our target area at that point. Now this can be wave C down here, or it could be wave 3. So one of the ways I'll check on that is I'll check stocks, some of the bigger stocks around the world. We'll have a look at those, and we'll have a look at where their count is as well. So we'll have a look around the block, and we'll see where everything else is at that point in time. But as you can see here, just squashing all this in here now, just so we can recap it, from wave B here down to wave C here, the job is to count those 5 waves. And that's sort of, I think, where we are. Yeah. So we'll have a quick look at silver. Okay, so it's a daily chart. So, yeah. So in a nutshell, we're looking at it. I've got a bullish count for it, but I won't go into the bullish count today. But the bullish count is valid until this low here is broken, right? So that's where we had it as a short trade, but then we could also bring that up there for the short trade. But it could be a trap at that point. But once that low there is broken, then by a move down through here, then it's likely that we're going to have this like move lower in here. But it hasn't been broken yet because that move up there is 5 waves. So we could look at that as wave 1 with an A and a B and a C wave here. I don't think it's the case, but it's possible. So I need to, just emphasize that a little bit. Taking this low out here was in the short trade was the right thing to do, but it hasn't really confirmed by taking out this low, which is really the one that we want. And if you're a bullish mode, and that's fine too, then you'd go long above here. And in fact, we could probably put the stop above that bar there as well. So I'll just do that. So that way we've got a nice tight little scenario in there in terms of risk reward. But I'll just check on that when we go in to have a look at the intraday on this. So that's it. Let's just repeat that a little bit. I have a bullish count and it's valid as long as that low stays in place. I won't look at that today. We've looked at it before. And the bearish count would be this one here being breached. Last time we spoke, we talked about going short below that one here. And now we can also say that we could go long above this high here. And if you're short at the moment, then that stop needs to go in there. But we're going to double check that when we go into the hourly chart. Should do the trick. So it's a little bit weird, I have to say. I mean, this is okay coming down here as wave 1. As an A and a B and a C wave, it's okay. But I have to say that it's a really big, it's really huge, like an ABC pattern for wave 2. So it just doesn't have the right feel about it. It's probably, what we'll probably have to do is copy that and put that there as some sort of B wave or something. And look at this as a C wave coming down. So I'm just assuming this is 5 waves here. It's all a little bit dodgy. And in fact, it could end up being over here as well. I won't go into the tick chart at the moment, but this is basically where we would look to go short. So we don't want to go back above here. So we can have a small loss is a good loss. So we'll keep it nice and tight there, and we'll just see how this plays out. It's still within group 2, so group 2 is 65, 72 where the orange line is, and then the other minor level here for that. So this is all of group 2 and it's sitting in here. It hasn't found the 65 as the retested resistance. If that occurs, I mean, a spike down through a level is not resistance, It has to come back up and check it and so on and find it as resistance. It's traded back above that. But like I said, it really needs to take out this low here too. It needs to take out this low here to confirm that this is an A, B, C correction. Otherwise, we could look at this as wave 1 here, and then an A wave, a B wave, and some sort of C wave to here in some sort of screwed up way of 1 and 2 and 3 down here, A, B, C for 4 and down for 5 here for wave C here, and then moving up from that point. So it's possible. So we could put this as 1 here and then copy this here as wave 2 at this point. I mean, it's good to look at both sides. As wave 2 here, as an A, B, and C here. Now, I mean, I can see this here as 1 and 2 and 3 down here, and all of this is, I mean, that spike, we could just forget about the spike and go an A, B, C for wave 4 here, still under wave 1, and then 5 waves down here, which is also dodgy as hell. But, you know, being a little bit philosophical about it and, you know, putting a bit of reason. But anyway, whichever way it goes, we need our stop there. But not only that, we also need to go long there as well. So they're pretty choppy, stormy waters, and don't forget, I mean, it'd be nice to have gold and silver sort of moving together, but it's not always the case. So yeah, we'll take all that with a pinch of salt. And look, if it breaches this top here, then we'll look at our bullish count, which is, yeah, or we'll have a look at it then. I won't waste too much time at the moment. But that's both sides of the coin, and let's see how the cards fall. Alrighty, thanks for tuning in. Cheers.